Hey everyone, welcome back to another video and long time no see. I was actually taking the break from the markets, but anyways, the markets were not moving too much because of Christmas, and then right now it's Saturday, Sunday, and then there will be New Year. So probably we'll be starting our trading again from 6th of Jan, which is the first Monday of next year. But yesterday, Nasdaq gave a really great move, which I caught, and I cleared my phase one of my Fundednext account. Now, what is the move? How did I actually capture it? I have actually posted the trade on my Discord, so you can, on my Telegram. Link is in the description. You can check it out there. That what was the trade exactly, where I sold and where I bought. And now, this entire video is to tell you guys how did I take the trade, what was the strategy that I used. In fact, what is the concept that I used more than the strategy, and how did I manage my risk in simple terms. That is the entire thing that I am going to speak about in this video. Now, before starting the video, we also made a gold video on how I caught 120 pips. From then till now, I have taken some minor trades, but this was the major trade again. So again, coming back to the point on the Nasdaq trade. So as you can see on 20, I believe this was last FOMC meet, and this is when Fed was hawkish and markets started dumping. So we can see this huge dump of almost close to 1300 points, right? 6% dump from the top. And this is where exactly, the market turned bearish on a daily time frame. As you can see on a 1 day time frame, Nasdaq has turned bearish because it has given a bearish change of character. And it created a nice little fair value gap as well. Now, you need to understand one very important thing, that whenever you fall so much, right, you're not going to continue continuously, right? Market will retrace, market will need the liquidity, market will need more buyers to get in the sell side liquidity again and go ahead from there. So this is how this entire fall happened. And if you use the Fibonacci over here, you can see one very interesting thing, that market has come to an OTE, optimal entry, right? This was the zero point 0.8 level, 0.7 level, whatever you can say it, and market retraced all the way back till here. That means market retraced for 80% of the entire fall. A normal retailer at this point would think that we are going to retrace because this is a V-shaped recovery that is happening and we are going to move ahead from here. But you need to understand that 0.78 is a very strong level from where a pullback or where a reversal can be initiated, and that is what exactly that I did. So if you can see, market has, after going to the 0.78 level, market showed a bearish 1 hour change of character as well. So over here, market actually did its thing and it showed that, boss, I am at the 0.7 level and I have been bearish. And I presented these two candles. If you can see, take a look at these two candles. So these two candles are enough to tell you the picture that market is reacting from a very strong level and we can look to initiate our shorts over here. And exactly at this point, you can see, if you go on a 15 minutes time frame, it tapped on a 1 hour, it tapped on this 0.78 level, it gave a bearish change of character. If you go on a 1 hour time frame, you'll be able to see that we have formed a fair value gap as well over here, right? And we created another fair value gap just below it, but let's take this fair value gap for reference. And once this fair value gap was created, market respected this level. It did not say I'm gonna go past it or I'm going to invalidate it. Market respected this entire level. On the 15-minute time frame, it showed lower high, lower low, and as soon as Asia opened, it started dumping. So if I just open this indicator is called Lux Algo ICT Kill Zones Toolkit. So if I open this indicator, you can see it opened, Asia started moving lower, London started moving lower, which shows that for the day I am moving lower. And you see this is a downtrend, right? Because we have already reacted from a very strong level. So do you think it will reverse from a wick? No, obviously not. There is no higher time frame PD array over here as well. So we are on the bearish side. On Asian it moved lower, on London it moved lower, and final nail in the coffin was when it swept London, and that is where I made my entry. So it came back, it gave an opportunity for the people to sell. It swept London, If you go on a 5 minute time frame, you can see that an inverted 5 minute fair value gap got respected, and as soon as some action happened over here and as soon as this broke out, that is where I sold, and I rode it all the way till the bottom over here. You can see the trades in my telegram channel as well, with my entry and my exit. But this is how this entire trade worked. Now what are the things you need to understand? If there is a retracement, always wait for 0.5 level, 0.6 or 0.7. Do not sell from 0.2 or 0.3 levels, because that is where the entire equation is going to get messed up for you. Number one. Number two is that whenever you're in a downtrend, always try to play the downtrend. Do not try to play the reversals. A lot of people I saw have caught this entire huge up move, but I'm pretty sure there was no confluence to go long over here. It would have been just conviction. And I'll tell you one thing, with conviction, you can only do it so many times. You cannot repeat it with conviction, because that is a subjective thing. It's not objective. You cannot objectify it. But if I tell you that from 0.78 level, whenever market reverses, find a 1 hour fair value gap or a 15-minute fair value gap or a 4 hour fair value gap and take entries over there, it's objective. I'm objectifying it because it is the market's characteristic that if it is in a downtrend, it will go down. If it's in an uptrend, it will go up. Right? Now, if at all market reverses from here, that means Nasdaq reverses from here, that's well and fine for me. I do not have any problems, right? But I will only try to play the shots from here as well, because market has dumped. It has given a great reaction. You can see sell side liquidity resting upon here, right? And I can call this as the liquidity as well, right? Daily closing is bearish, so I may target for these two lows. And to target these two lows, where do I have to take entry? Maybe I'll take entry over here, right? Or maybe somewhere over here. Wherever I get a bearish sign from a very, very important level on an important session, London or New York, I take my entries there. And that is how you can actually conceptualize your conviction to objectifying it. If you objectify it, you can repeat it again and again. If you are subjective, because I was subjective at the start of my trading journey, that this was my conviction, I went long, this is my conviction, I went short. But conviction cannot be repeated again and again. And the day you are wrong, your conviction will help you blow your entire account. Okay. So, anyways, this was the entire video. I hope I have told some important points that might help you. I cleared my phase one with this particular trade. I was already up 4% and I made 4% in this particular trade. So that's all I have to say for today. Thank you so much for watching the video. And if you haven't subscribed, you can subscribe it yet, and you can like the video as well, and you can let me know about your feedbacks and doubts in the comments below. Thank you so much for watching the video, and I will see you next year. Bye bye.